welcome to the week ahead from ICM.com. So first we're going to start by talking about the key market movers, and then move to highlight the top economic events or releases for the week, and then go over some charts on the MetaTrader 4 platform to try to detect some of the forming patterns. So first, let's go to first slide. Continues the COVID-19 implications on the economic recovery continues to be the number one market mover, especially with the resurgence of cases in Europe and around the world. We crossed almost 40 million. So this is just raising concerns for policymakers, for governments, how they have to face the second wave of coronavirus. There are a couple of significant countries, a couple of countries having significant rise in cases, which is also weighing on the economic recovery of these countries. And we started hearing from top officials and top central banks like the European Central Bank, Bank of England, the Federal Reserve. They started also imposing their concerns or the woes over the impact of the second wave on the economic recovery. So still this thin line is still there. Governments, they are trying to avoid the lockdown similar to the one that took place in March in order to try to sustain the economic activity where it is and not weigh more on the economy like what we witnessed in the second quarter of 2020. So any further steps from governments that could, for example, suspend the economic activity will definitely weigh on the economy and this will impact the market significantly. The next key mover, Christine Lagarde, she's like impressing every time her concerns over the economic outlook, and especially as we said, since the surges or the rising cases of coronavirus in the Eurozone in top European countries is weighing on the economic outlook, and this could force the European Central Bank to act further to support the economic recovery. So Lagarde is always trying to express the readiness of the central bank to act further to support the economic recovery. Today also she reiterated that the ECB still has room to act further. They didn't use all their tools, so she's trying to ease investors' woes over the role that the European Central Bank can play in supporting the economic recovery. The third key mover, the Brexit, we're seeing volatility on pound pairs, but still there is no directional move. We're still trading inside the certain consolidation zone since there isn't anything clear yet about the Brexit. Both parties, the European Union and the United Kingdom, failed to reach a compromise or a deal over a trade until the moment, and this is adding uncertainty to the performance of pound pairs and also of some European indices. So until now, there is nothing solid, or there is no solid improvement or success or achievements in the negotiations that are taking place between the European Union and the United Kingdom. Soft economic indicators, we started seeing economic indicators falling in September, and now we're waiting for some indicators for October. So if we just have any simple look on the charts of economic indicators, we can see that the sharp rebound took place in, for example, in European countries in May, June, July, and we started seeing a little bit of a drop in August, and then in September we had the significant drop in some of the indicators, and especially following the NZDUSD economic sentiment, which measures almost sentiment in Germany, business sentiment in Germany. It fell sharply during last week's release. So this is also an alert for the coming indicators. So these economic indicators, the soft economic indicators or drop economic indicators, the disappointing economic indicators, they're definitely adding to investors' concerns over the path of the economic recovery that is taking place currently. So this, if central banks are waiting for further data, so if they witness further weakness, like they are, for example, some officials from the European Central Bank today, they stated that they are worried about the drop in economic indicators, which is signaling that the economic recovery is losing track. So this would definitely weigh on some instruments going forward. So these are the main movers that we are facing or that are affecting the market in the past couple days, especially in addition to the stimulus talks in the United States, which are stalled currently. So there are no solid developments on fiscal stimulus or the packages that could support the economic recovery in the United States. So these are among the key movers for the market recently. Now let's move to highlight the top economic releases for this week. So we start by tomorrow morning, the minutes of the last Reserve Bank of Australia monetary policy meeting. The bank in its last meeting kept policy unchanged indefinitely, but after that, like we witnessed last week, the governor of the Reserve Bank of Australia stating that the Reserve Bank could apply additional monetary policy easing, especially after disappointing economic data, after witnessing that the economic data are losing track. So this could lead to further action from the Reserve Bank of Australia, and we saw this weighing on the Australian dollar during the last week. So this is how the market is sensitive for any change or any dovishness in tone from central bank officials. So minutes will be watched carefully, and then we move to the United States with building permits, which are expected to have risen to 1.505 from 1.476 million in September, and the API weekly crude oil stock. Also, we have it tomorrow, late tomorrow, and moving to Wednesday. We start with the inflation figures from the United Kingdom. Expectations of CPI to rise to 0.5% in September versus negative 0.4 in August. This is a huge improvement or huge pullback in inflation. So bounce in inflation. So we have to watch it carefully. This could ease the Bank of England woes over maybe the target of inflation in the coming months. Also, ECB President Christine Lagarde will be speaking. Most probably, she's going to reiterate what she's been saying for the past couple of appearances, which is that the European Central Bank is ready to act further to support the economic recovery, and she's going to try to calm the nerves of investors. Moving to Canada, we have also two releases: the Consumer Price Index or inflation figures, expectation to often drop by 0.1% in September, and then we have the retail sales figures, which are expected to come in at 1.1% versus 0.6% in July. The weekly crude oil report by US Energy Information Administration to show a drop in inventories by 2.835 million barrels, and the beige book, which would give us an insight on how 12 districts in the United States were performing. On Thursday, we started the day with the Bank of England governor's speech. Any further talks about the implementation of negative interest rates could add to the pound suffering, for example. In addition, so this will be another reason or another bearish reason, another reason supporting the bears. In addition to the Brexit clash. Moving to United States, existing home sales to show a rise to 6.3 million from 6 million. Initial jobless claims to fall again to 860,000 after rising 898,000 during last week. It's an alarming reading. It was an alarming reading last week, 898,000 after witnessing numbers dropping below almost 840, 830. So this bounce back to 898,000 is a bit alarming. Consumer confidence from the Eurozone to show a further drop, negative 15 from negative 13.9. And then we have the inflation figures from New Zealand show a rise to by 0.9% during the third quarter versus a drop 0.5% in the second quarter. On Friday, it's a bit busy. We start with the United Kingdom also with retail sales to show an expansion by 0.5%. And then we have the preliminary reading of the manufacturing services PMI from the Eurozone, United Kingdom, and the United States. So these numbers are key in assessing the economic activity. We can see along the line that mostly in the Eurozone, the numbers are expected to fall. For example, manufacturing PMI to come in at 53.1 versus 53.7 in September. Services PMI to drop to 47 from 48. So this is a contraction phase, still in the contraction phase. United Kingdom manufacturing to rise slightly, but services to drop 55 versus 56.1, still better off than the Eurozone. And in the United States, this is the market reading, manufacturing PMI 53.4 to rise by 0.2% to 53.4, while services to remain at 54.6. So this could have some impact on the market if we have like really big disappointments at the preliminary reading. And we end the week with the US Baker Hughes oil rig count, which showed last week a huge jump in oil rig counts to 205, showing that producers in the United States are back to work. So this could weigh in the future if we have some further, for example, if COVID will continue to weigh on economic activity and we see a drop in demand levels while supply levels or production levels are higher. So this would definitely weigh on the prices in the future. Now let's move to the MetaTrader 4 platform to try to detect some of the foreign patterns. We're going to start with the euro dollar. Okay, so we're going to start with the euro dollar, which is bouncing back today. If we just have a small assumption where the pair stopped at 61.8 retracement of the last move, so we had a swing higher, and then we had a correction. Now, as long as we are above the low, we are continuing for another move. So what's happening mainly here? We had this move, we had another move subsequent, and now we had a corrective move for this rise, and now we're moving back higher again. So definitely you need to watch out the previous high of almost 1830, and after that you have the highest level near 1910. And on the downside, as long as we're above almost 117, 116.90, this could be supportive to prices. While if we were able to drop below it, we could be retesting almost 116, 115.80 for levels. So these are the levels that you have to watch out for. I'm gonna highlight them in a better way. 116.85 and 116 level almost on the downside, and on the upside that you have to look out for 1830. After that, almost 119.15. So these are the key levels if you are trading the euro dollar. We're currently trading inside a certain consolidation phase here. So we had a move up, down, up, down, up, down. Now we had a bigger correction. Now we're moving also bigger correction to last swing lower. We're having a bigger correction to the upside. In terms of indicators, we can just add some indicators. We can see how the market reacted, respected the trend line. We had the break of the trend line on the RSI, and then we had this retracement here, and then the market is moving higher again. So also what coincides with the previous levels is the 100-day exponential moving average and the lower band of the Bollinger Band. So also this could make 116.50, 116.60 also a minor support zone. So this is for the euro on the bigger time frames. If we just go scroll towards smaller time frames, we can see here how the market is trading almost sideways. So it's just lacking some of the key drivers in order to have a certain direction. Moving to the hourly chart, we were able to break successfully above the 100 and 200-hour exponential moving average, which is a bit of a positive sign here. So this break here, it's a bit of positive sign, especially following this resistance sign here and then another resistance. So here we had resistance twice, and then the market here was able to trade above it successfully. So this is a good thing to note. So we highlighted the key levels. Now let's move to the British pound against the United States dollar. So the pound recently, if we just have a closer look on the bigger picture, the pound is still trading sideways for the past couple of days. So this is just a certain formation that we've been trading inside. So this is almost a rectangle that we've been trading until investors can have more insight on what will happen on Brexit. So they can have better expectations for the market. Then they can go for a certain direction. But currently, since we lack a clear direction on how Brexit will come out, so investors are a bit concerned, and this uncertainty is leading to this sideways movement. If we go to the H4 chart, you can see it much better. We have a certain side of higher highs. We had higher highs and higher lows, but now here we failed to post a higher high while the lows are still holding almost. So we just need to highlight a certain area. So definitely you need to mark these bottoms. So this area here between 28.50 and almost 128 is a key support zone. So this 50-point area is a key support zone ahead of previous low of 26.70. And on the upside, definitely we have the previous recent high near 30.80 ahead of minor resistance near 31.85, and then the 32.50, 32.60 level. So these are the key levels if you're trading the British pound against the United States dollar. As long as we are lacking input on how the Brexit will end, there could be an extension for this sideways move. Maybe we can see a bigger range, but definitely maybe we won't be able to see a certain clear direction in the British pound unless we have, for example, a bit of more pessimism regarding Brexit, and it's obvious that they're not going to reach a certain deal. So this will add support to bears, and we can see the pound retesting previous lows. While on the vice versa, if we see some positivity, like some compromise between the two parties, this could lead for further appreciation in the British pound. As long as there are no signs of a deal, the pound could continue to move sideways. So you can witness here how the market was moving like sharply to the upside and downside, raising gold, making gains, erasing gains, making gains, erasing gains. So on all the headlines that were available in the market, we were witnessing a certain move. So you can see how the market was moving for the past almost 2 weeks, up, down, up, down, up, down, up, down, almost in the same range that we are highlighting currently. So this is for the British pound. I'm just going to add these indicators again. So on the daily chart, you can see how the bands are closing in the Bollinger Bands. We're trading near the 100 and 200-day exponential moving average, along also the 20-day simple moving average, which is the middle band of the Bollinger Band. So all these technical setups, they are showing us that we're trading inside a certain consolidation, awaiting some fresh drivers in order to have a certain directional move. Also on the H4, it's a bit clearer. You can see how the bands here, they were narrowing, and then here we had the divergence between the bands. They opened, they became wider with the rising volatility and this move here, and then now we're almost closing in again. On the hourly chart, also nothing much to tell, because we're trading above and below the 100 and 200-day exponential, 100 and 200 hour exponential moving average. This is just confirming the sideways move that we are just talking about. Moving to the dollar yen. Also, we're not having much of a move on the dollar yen. On the bigger picture, we're still trading inside a certain consolidation zone. So you just have a minor support near 105, and then head of the bigger side of the zone 104, and on the upside the recent movement was stalled at 1610 ahead of key resistance near 107. So this is also a consolidation zone that we've been trading in. We have a bigger consolidation zone and we have a smaller consolidation zone. The smaller one we've been trading in since almost late September, and the bigger one since early August. So this is, if you just have to draw it like that way, we have this bigger rectangle here, and we have this smaller one that we've been trading in. So if we want to trade it, it's either you have to trade the breakout to the upside, if you believe like there would be certain market movers that could lead to a breakout out of this zone. So it's either you can trade the breakout of this zone and then maybe highlight or target the upper side of the bigger consolidation zone, or you just, if you're bearish on the pair, you can trade this move lower towards a retest towards 104. So these are the types that you can, or the tactics that you can follow while trading. Also, if you want to follow more classically, you can just draw this trend line here that's combining the previous stop. So any break or any violation of this trend line maybe could give you more confirmation of another move towards the 107 area, 106.95. This is how you can assess what's happening with the dollar yen. If we just go also for the hourly chart, you can have a closer look. So watch out for this move that could be a bigger head and shoulder with complex shoulders, and another move higher. So watch out how this will play, since if we just add these the moving averages, you can see how first on the daily chart the movement was capped by the 100-day exponential moving average. On the H4 chart, it's capped also by the 100 H4 exponential moving average. So you can see how this is acting as a dynamic resistance, 1, 2, 3, 4. So on any retest or any possible break of this trend, of this moving average, it could lead to another retest to previous zones near 106, 105, 90, or almost 106.60. So this is how it's going. If you just also go for the hourly chart, you can see how the moving averages were capping any move to the upside. So this is resistance 1, resistance 2, and this whole area here, it was full of resistances. So watch out how this will play. So this is what I'm trying to explain to you. So we're trying to have a move here. So we have these. We have also here almost similar neckline. The neckline also it's coinciding with 100 and 200 hour exponential moving average, and we could be forming an inverted head and shoulder with also this the right shoulder, the right complex shoulders could be a type of triangles, which could be continuation triangles, and then we could witness another move higher here, and then another one higher. But we're just lacking catalysts in the market. So this is what could happen with the dollar yen moving to the dollar against the Swiss franc. Sharp steep move lower today, especially the dollar is losing momentum against these top currencies. So what we'd have to highlight is definitely the previous low, which is almost we're currently at, so almost 90-80 level. And then we have to go for the recent low near 90 psychological level. On the upside, we need to have a clear reversal above 91.67 for bulls to come and control again, maybe drive prices higher towards 92, 90 or 93 level. So this is a smaller zone that we're trading in. We have a bigger candle, and then where we were trading for a couple of days inside this bigger candle, we're having inside candles, and now we can definitely highlight the tops and bottoms of the recent area that we've been trading in, which is almost 90.85 and 91.67. So this is a smaller range. You better trade any breakout out of this range. So this is for the dollar against the Swiss franc. I'm just gonna add these indicators. If you can see here how we're trading near the lower band or the lower part of the Bollinger Band, we had a certain resistance here, the 20-day simple moving average, and the price is moving towards the lowest band, which sits at 90.65. On the H4, we're seeing the bands, they are widening after having this consolidation move here, which brought the moving averages and the Bollinger Bands closer to each other. And now we are witnessing a wider move or a sharper move. On the hourly chart, also similar, we had this consolidation zone here, and we were able to break below it, and currently we are trading back below it. And this is the level that you can watch out for, the one that we just highlighted near almost 90.85. So this is for the dollar Swissy. I'm just gonna move forward to the Australian dollar against United States dollar. So this move here that we witnessed last week, I'm just gonna start with the daily chart. So this move here that we witnessed last week was due to the raised or increased the chances of further monetary policy easing by the Reserve Bank of Australia, especially following the comments of the Reserve Bank of Australia governor. So this his comments here weighed on the pair, and we saw the pair dropping, or we saw also the Australian dollar dropping against other major currencies. So, and just to highlight the key levels that you better watch out for, you have to go for the previous low, which would coincide with the 200-day exponential moving average going forward, and it currently sits at 70 level, which is also psychological level. And following this level, we have the previous support zone that was trading here near this consolidation zone near almost 69.10. So these are the key levels on the downside, while on the upside you can go for the previous resistance near 72.50 area, 72.30, and following that we can target 73.40. So we're trading for the past couple of days, couple of weeks. We're trading inside the bigger consolidation zone, 250 points consolidation zone between 70 psychological level and 72.50. We're just awaiting some key drivers for the pair to either drag it lower towards 69.10 or even lower towards 67, or just move with the pair higher towards almost 70 to 64. You can also draw this trend line that we were trading at, and we witnessed here the disappointment or the failure of a break above it, and then the market moved lower again. So you can see here, we just move closer. You can see how the market is trading classical technical. 1, 2, the trend line here, we had a rejection, the market moved down, clear down, and now here we're having consolidation near the 100-day exponential moving average. If we just go to smaller time frames on the H4, you can see here following this consolidation move here, now we're trading back lower. However, we're having also consolidation today. Past couple of days we had a bit of consolidation, a smaller zone between almost 70.50 and 71.20. So the 70 pip range. We're in the middle of the Bollinger Band. Any break back to the lows could retest the lower band, while any move higher could retest the 100 and 200 H4 exponential moving average and the upper side of the Bollinger Band. We go to the hourly chart, it's much clearer here, this narrow trading here, where the bands were closer, and now we are having higher volatility where the bands are wider again. So as a trader, you definitely have to also draw this trend line here and watch any break below this trend line, since almost here, if we just highlight this, you can see that we're almost trading, we have almost a flag here that we are trading it. So the market moved down, correction, another move down, and now here we have a consolidation zone, so watch out for any failure and then another move lower if the chances of further easing were on the rise. So this could weigh again on the Australian dollar against the United States dollar. Moving to the New Zealand dollar. On the daily chart here also, so just similar to what we just mentioned on the Australian dollar on a smaller time frame. Here we had a double top and then the market moved, and now after this sharp move lower, we are having consolidation, or we're trading inside this certain zone. So this also could have this trend line, rising trend line. Any break below it could add to New Zealand dollar losses. If we have to highlight the levels, so watch out for the trend line, any break of the trend line, then this previous support zone 1, 2, and 3, 65.06. So watch out for any reversal formation on the top. So here we have this move, and then here we have this complex head, and now we're heading for a certain shoulder. So watch out how this neckline here could play. So this is a key zone for New Zealand dollar, 0.65. Watch out how this will play. Any break below 0.65 could accelerate the move to the downside, while as long as we are above it, this could mean that we are able to retest the recent highs. So 0.65 on the upside, 0.6680, and the previous top near 67.90, and here on the downside we have 63.70. So these are the key levels for the New Zealand dollar against the United States dollar. We have smaller range trading zone 66.80, 65, and below 65 we have 63.75, and above 66.80 we can target 67.90. So these are the key levels for the New Zealand dollar against the United States dollar. I'm just gonna add the indicators also again, and you can see here how also these lows are coinciding with the 100-day exponential moving average. So the moving average is providing some support, dynamic support to the pair. So watch out for its break, since any break below it was also the violation of this trend line that's combining the recent lows. So this could lead to another drop lower. On the H4 chart, you can see certain clear consolidation move here that we talked about. Consolidation, we're having certain range trading, the one that we just talked about. And it's clear from the moving averages. You can see how the moving averages are coincided. This is the 100 and 200 H4 exponential moving average. They're almost the same on the same place. This means that we are in consolidation zone, awaiting some fresh drivers. So if the drivers were bullish, then the 100 and 200 will be separated by this way to the upside, and if they were bearish, they will be separated by this way to the downside. So this is how you can use moving averages to try to detect where the market could be heading for a certain breakout. On the hourly chart, nothing much, where the moving averages are providing some dynamic supports and resistances. On the break of the support, we have the sharp move lower, we have resistance, another resistance, now we are trading back higher again. You can definitely add the Fibonacci retracement to check the levels that we could be trading at. Currently, we're trading at a 61.8 retracement of the last move lower. USD, the United States dollar against the Canadian dollar. So on the daily chart, following this sharp move to the upside, we're now heading lower again. So we had a move and then a consolidation, correction, another move higher, and correction. And if we just have a closer look on the H4 chart, it's going to be a closer look. So we had a move lower, we had a correction, another move lower, impulsive wave, we have a correction, and now we are moving lower again. We were able to post lower highs and lower lows. So we could be heading to retest the previous low as long as we are moving the same scheme. So definitely you have to highlight one low, which is almost near 1395. Another one near the 30 psychological level. And on the upside, we need definitely a move above the 3250, 3260 area, which was solid resistance here, and was solid resistance here and solid support here. So it's a critical level for Australian dollar, for Canadian dollar traders. And also, you have to highlight minor resistance near 3340. So these are the key levels if you're trading dollar against the United States dollar against the Canadian dollar. You can see on the daily chart we're trading the lower part of the Bollinger Band. So any trade or any cross above the 20-day simple moving average, which is the middle band, could give the bulls some power, and maybe we could retest the previous high that we just talked about. On the H4, it's solid how the 100 and 200 H4 are providing resistance for the pair. On the hourly chart, the pairs are the price has crossed back lower below the 100 and 200 hour exponential moving average. And the RSI, you can just draw also here this formation. So the market was moving lower, and now we are having a certain move here. So watch out how this will come into play. So it's either we're going to have a sharper drop lower and the RSI will move below 30, and we could be retesting the 130, 131 level, or we just have a bit of a failure to the downside, and then the market will move higher again. So we have another correction, and we have certain sideways trading. Watch out on throughout the week. On Wednesday, we have key data from Canada. They could be key movers for the market. Moving to gold. So on the daily chart, it's very clear that we're trading. We have this trend line here, which acted as key resistance for a couple of times, and also we are having a series of higher lows. So the trading is narrowing here, the range is narrowing, but we still lack drivers which could support the prices to break out of this certain consolidation zone. So if we just notice that we had the sharp move here before, and now we are having a consolidation or a corrective move inside this bigger zone. So as if it is one candle here, and now we are trading inside the candle, awaiting some key drivers in order to break out of the zone. So on the H4 chart, it's also clear, so you can just draw it here. I'm just gonna draw it again. So watch out how the price will react by the retest of any of these trend lines. Now we were closer to this trend line, and the market moved lower almost $10 now. So this consolidation area here, you have to look up for it. If you just need to highlight some certain levels. So definitely, in addition to the trend lines, we have to focus on 1870 and 1848, 1850, and on the upside, we need to clear above 1932 in order to give more room for a move higher towards 1972. So we're trading inside this consolidation zone for a while, since late September, and we need key catalysts for the market to break above. Any break above the falling trend line could lead to a move towards 1932 and then 1972, and any break below the upside uptrend line that we've been drawing by combining the previous lows could lead to a move towards 1870 and 1849 accordingly. So this is what you need to know about gold. I'm just gonna add the indicators also. So on the daily chart, you can see how the 100-day exponential moving average is providing support. We're trading inside almost the middle of the Bollinger Band, around the 20-day simple moving average. The RSI has failed to move above 55 until now. On the H4, it's a bit clearer how we're trading inside the certain consolidation zone, and here the bands were closer to each other following this consolidation move here. So watch out for any break out of the bands, which could lead to a certain, definitely if you have certain drivers, the market's gonna move in a directional way, either to the downside or to the upside. Also on the hourly chart, it's clearer here that we've been trading inside a certain consolidation zone. So also you can draw this. This is the consolidation area that we are trading in. Watch out how the price will break out of this zone. So it's either we're gonna break above and go like this, or then we have a move lower, then maybe retest these previous lows here. So this is how you can assess what could be happening in the market and gold prices in the coming days. Moving to silver. Bigger picture, we're still trading inside this channel that we've been drawing for the past couple of weeks. We're still trading inside this channel. We're having sideways move also here. So if we just draw this trend line, we can see how it's almost, we're having higher highs and higher lows, but currently we failed to post a certain higher highs. So watch out for any disappointment here or any reversal here. Also, you can draw from the top, you can draw this trend line here that's combining the previous tops. So we're almost consolidating inside a certain triangle. You definitely have to add the previous support zone, which should turn out to be certain resistance near almost 2570 level. So this is a key level for silver traders. Any move above 2570 could lead to further gains and retest of the upper side of the channel and maybe previous stops near 2895. And on the downside, any break below the trend line that is drawn could lead to a move towards 2280, and then we could retest the bottom of the trend line or the bottom of the channel, which could be coming near 2080 or $21 per ounce. So this is for silver. We're gonna move to oil quickly. Still for oil, we're still inside the same range. We're still trading inside the consolidation zone of almost $4 to $5 zone until we have some key movers. If we just have a closer look on the hourly chart or the H4 chart, just clearer that we have a big consolidation zone and we have a smaller one here. So you can trade the breakout of the smaller zone. On the upside, it's the same. So we're having the same resistance line almost near 4180, and on the downside, we have a minor support near 3920 and 3670. These are the key zones. If you're trading oil, just for the upside, you can just highlight additional levels near definitely the previous stop here. So these are the key levels for oil if you are trading oil: 4165, 4390, and on the downside 3930 and 38 and on the downside 3682. So these are the key levels. If you just add some technical indicators, you can see here also they confirm the technical indicators. They are again confirming the sideways trading that we are in. If we just go to the Dow Jones, we start with the daily chart. We're having a bit of fluctuation here, especially with the lack of new information about the stimulus, and there are no expectations of reaching it yet currently. Since every day we're having like different announcements, especially from Trump. So they started with 500 billion, and then they went to 1.6, and then 1.8 trillion, and they're just approaching closely to the Democrats' target. So this is what's keeping the market a bit in a bullish scenario, but definitely we have to weigh any headlines that could come in. So in order to highlight some of the levels, we have previous low of 28,100, and any break below this 28,100, 28,107 will definitely lead for another move towards 27,635. And on the upside, we have 29,100 or 28,917, and after that, previous stop 29,100, 200, and the all-time high of almost 29,600. So this is for the Dow. We just have a closer look on the H4 chart, and we're going to make it closer. So these are the points that I highlighted: 28,159, and this is a smaller zone that we're trading in. After that, we have definitely the previous stop, which is not going to look here. So it's just going to here, then go back to the hourly chart. And on the downside, this is almost here at the double bottom. which was taking place near almost 27,250. We had a retest for it twice for this level. So this is a smaller zone that we're trading in. It's a almost $1,000 range. And then any break below this low of 28,158 could lead to a further decline or further profit taking on the move higher, and then we could have some moves here and then move another low to retest this low here. And on the upside, if we just have to move, we have to clear this level here. It's a key level to clear above. It's 29,000, and then we have the 29,100, which is the previous or the recent low, the recent high that we just posted in the market. If we just add the Bollinger Bands and the RSI and the moving averages on the daily chart, you can see that the bands are a bit wide, and now we're moving to trade from the upper band. We were trading near the upper band. Now we're closing in towards the middle of the band. If we just go also to the H4 chart, you can see how we traced lower to the 100 H4 exponential moving average, showed resistance once, support 1 and 2 times. So watch out for a third retest, which could lead to a break below this moving average and maybe retest the lower moving average. And if we have a close look on the H1 chart, we're almost trading, starting a certain consolidation phase. The moving averages are losing slope, and they are almost steady at a certain pace since the market is moving sideways. So this is what you need to know about today. This is all for today's week. If you have any questions, please write them down. So if you have any questions, please write them down. I'd just like to remind you that all the information, news, analysis, and opinions mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. Perfect. I believe this is it for today. Thank you all for watching and have a great trading this week.